Payroll is much more than just writing checks to your employees. It is the complete process of paying your team for the hard work they do. This includes calculating their wages, withholding the correct amount for taxes, handling any deductions for benefits, health insurance, retirement plans. Think of it as the financial engine that keeps your business running smoothly. When your employees are paid correctly and on time, they feel valued and secure. This builds trust and morale, which are essential ingredients for a productive and happy workplace. Getting payroll right from the very beginning is one of the most important responsibilities you have as a business owner. Setting up your payroll system correctly is not just about keeping employees happy. It is also about staying on the right side of the law. A properly configured payroll system, like the one offered by QuickBooks, helps you manage these complexities. Before you can dive into setting up your payroll, you first need to choose the right QuickBooks payroll plan for your business. Intuit, the company behind QuickBooks, offers several different versions, each designed to meet different needs. The most common options are QuickBooks Online Payroll Core, QuickBooks Online Payroll Premium, QuickBooks Online Payroll Elite. Each tier builds upon the last, adding more features and services. Think about what your business needs right now and what it might need in the near future. Do you just need to pay your employees, handle taxes, need time tracking, need human resources support? Let's break down the basic options to help you decide. The core plan is a great starting point for many small businesses. It automates payroll runs and handles calculation and filing of payroll taxes. The premium plan includes everything in core but adds same-day direct deposit, integrated time tracking, and access to an HR support center. The Elite plan includes everything in premium plus tax penalty protection and a personal HR advisor. Carefully review the features of each plan on the QuickBooks website before you commit. Making the right choice depends on the size and complexity of your business. If you have only 1 or 2 employees and simple payroll needs, the core plan might be sufficient. It covers the essentials without overwhelming you with unused features. After reviewing your needs, subscribe to the plan that fits best. Sign up through your QuickBooks Online account. You can upgrade later if your needs change. Once you have selected your payroll plan, QuickBooks will guide you through the initial setup process. The very first step is to enter your company's information. This is the foundational data QuickBooks will use for tax forms and payroll calculations. You will need to provide your company's legal name, business address, federal employer identification number, EIN. Your EIN is a unique 9-digit number assigned by the IRS. If you don't have one, apply on the IRS website before running payroll. Accuracy is critical. Double check every entry. Next, how your company pays employees. Set up your first pay schedule. A pay schedule determines how often employees get paid: weekly, bi-weekly, semi-monthly, monthly. Choose what fits your cash flow and employees' expectations. Specify the work period each paycheck covers and set the actual payday. After company details and pay schedule, add your employees. Create a profile for each team member. For each employee, full legal name, home address, social security number. This is required for tax reporting. Add their email so QuickBooks can invite them to QuickBooks Workforce. In the portal, employees view pay stubs and W-2s online. With your company and employee profiles established, it is time to define the specifics of how each person gets paid. This involves setting up their pay rate and identifying any deductions that need to be taken from their paycheck. For hourly employees, you will enter their rate of pay per hour. QuickBooks will then calculate their gross pay based on the number of hours they worked in the pay period. For salaried employees, you will enter their total annual salary. QuickBooks will automatically divide this amount by the number of pay periods in the year to determine their gross pay for each paycheck. Next, you will need to set up any payroll deductions. Deductions are amounts subtracted from an employee's gross pay. These fall into 2 main categories: pre-tax examples, 401k retirement plan, pre-tax examples, health insurance premiums. This lowers the employee's taxable income. and post-tax examples, Roth 401k, contributions post-tax examples, wage garnishments. You will need to carefully add each type of deduction to the employee's profile. QuickBooks offers a list of common pay types and deductions to make this process easier. You can add hourly pay. You can add salary, you can add overtime pay, you can add bonus for deductions, you will find health insurance, retirement plans, garnishments. If you have a unique deduction that is not on the list, QuickBooks allows you to create a custom item. For example, if your employees contribute to a uniform fund, you can set that up as a custom post-tax deduction. Be sure to specify flat or percent and how you'll pay, direct deposit or check. Successfully running your first payroll is a major milestone, but the work of payroll management is ongoing. To keep the process smooth, establish a consistent routine. One of the most common mistakes is waiting until the last minute to run payroll. Common payroll mistakes to avoid: late filings, incorrect data entry, misclassifying employees. This can create unnecessary stress and increase the risk of errors. Instead, set a recurring calendar reminder for yourself 2 days before your payroll deadline or 3 days before your payroll deadline. This gives you time to gather timesheets and check for any special payment requests, bonuses, expense reimbursements. Run the payroll without feeling rushed. A calm and orderly process is a correct process. Keep your employee records up to date. Life changes affect paychecks. They might move, they might get married, they might have a child, all of which can change W-4 and tax withholdings. Make it a standard practice to have employees notify you and promptly update their profile in QuickBooks. This ensures every paycheck is accurate and your year-end W-2 forms will be correct, saving you from having to make frustrating amendments later. It is crucial to stay on top of your payroll tax payments and filings. Even though QuickBooks Payroll automates much of this, you are still ultimately responsible for ensuring it happens. If QuickBooks files and pays for you, ensure your bank account is sufficiently funded. If your plan only calculates taxes, make sure you pay and file the forms by the deadlines QuickBooks provides. Set reminders for these dates just as you would for running payroll. Consistently meeting your tax obligations is fundamental to maintaining a good standing with the IRS and state agencies. Finally, reconcile your payroll accounts regularly. At the end of each month, compare payroll liability and expense accounts with your payroll reports. Did the amount withdrawn from your bank match the payroll cost? Do payroll liability accounts show zero balance after taxes are paid? These checks give you peace of mind. By following these simple tips, you can turn payroll from a daunting task into a manageable part of your business routine.